Most people write off their business expenses through their personal return. That's called the 1040 or the 1040EZ. That can be if you're filing single or if you're married, filing jointly. Basically, that couple, person, whatever, writes their expenses for their business off through their Schedule C on their tax return. It's a pretty typical return. Most people do basic accounting tax filing measures through things like TurboTax. But if you're really a business owner, which means you own a active participating business, you can structure it through an LLC, a limited liability corporation. And that is the vernacular and the language that the business community uses, which gets to utilize and exercise their rights as an entrepreneur, a business owner in an active participating business, utilizing all the benefits and the beautiful vastness of the tax code, the IRS tax code, which is really written for entrepreneurs and business owners, priming the pump of the economy, creating jobs, moving and shaking, coming up with new ideas and inventions, testing them out, failing forward, trying again to get it right, thus creating more jobs and more opportunity throughout the economy, basically, to summarize. But what most people don't understand is when they write things off through their Schedule C, their personal tax return, they're not getting the full breadth and the benefits of the IRS tax code write-off opportunities. Usually also it's a much higher probability of an audit if you write things off through your Schedule C as a business owner. If you write things off through your limited liability corporation, your LLC, which is a proper structure for active participating businesses and business owners, then you can write off a large majority of pretty much all of your expenses because you are doing whatever you need to do and spending whatever money you need to spend to create business, to create clients, to create prototypes, to create um, new opportunities. That is an absolute truth of what business owners and entrepreneurs do every day, all day. Sometimes it doesn't work, but you don't know what works until you try it. And that is what the government, what's the right word, incentivizes, because it is an incentive. But if you don't know the game you're playing, which most people don't, even small business owners have no idea what opportunity there is to reduce significantly or potentially even close to eliminate their income tax by just properly structuring their business entity utilizing a simple, very well-known type of business classification called a limited liability company, an LLC, which I know you all know that term, but it's not what business you have or how much money it makes or how many employees it has. What matters is how you structure it. And that is directly from my tax attorney's mouth. That's just not me regurgitating it. And I've been a client with my tax attorney since 2014, so 10 years now. I've learned a lot along the way, and I think it's the single biggest, most opportunistic way to really make an impact on your rental property investing portfolio returns. And also for all of you business owners out there, whatever your business is, your number one expense is your income tax for the majority of people out there. So if you have an active participating business structured properly through an LLC, you can have write-offs flow through that business, which offsets your taxable income. To give you an example and illustrate this, let's say your business had $100,000 in revenue. Okay. And let's say your business, through the actual operating account of your business, through that bank account of your business, let's say your business is called Green Plant, okay, LLC, Green Plant LLC, and you have a bank account with Wells Fargo that is connected to Green Plant LLC, and you want all of your income from your Green Plant LLC services to go through to be deposited in that bank. Then what you do is you have expenses that are linked and connected to Green Plant LLC. Maybe it's your website. Maybe it's every time You buy new signs, that company's expenses get written off directly through that company. Maybe it's when you have a team meeting every week for your vendors, or maybe when you buy special cookies that have Green Plan LLC. That's such a great idea. We should do that for our PU. You want that business expense to go directly and build to that company. But then maybe what if you go out and have meals and entertainment? Maybe sometimes those expenses do flow through directly through Green Plan LLC, but sometimes they don't. I'll get to that in a minute. But let's just continue to say all of your direct business expenses flow through that actual bank account, just to make it easy accounting. For most of us small business owners, we need easy accounting. Wouldn't you agree? Keep it simple. That rule will always apply. But basically, so you have income. Let's say you have 100,000 of income, and then you have $50,000 of expenses. Okay, and then of direct expenses, and then let's say you write off another $100,000. You have writable, offable $100,000 additional expenses, but maybe you didn't put it through that bank account for a variety of reasons. First of all, for example, what if you have a home office? Chances are you're going to pay your mortgage through your personal income to the bank, and you're going to write off a portion of that for your home office. Say you have gas in your car. Maybe you don't write off all of your gas because not all of your gas is used toward your business. However, if you're an entrepreneur and you're a road warrior and you're on the road all the time, a lot of your gas is going to be a write off. That's for the tax attorney to help you decide individually what that number is. Okay. It does differ, and I don't know enough to tell you what exactly it is, but there is a percentage you can write off. Also, for your meals and entertainment, every time you go out to dinner, and you go out with a group of your friends. Well, believe it or not, a lot of your friends sometimes become clients, or maybe they're friends, or maybe they're friends of friends in the network, or maybe you bounce a business idea off them, or maybe there's a mentor that you go out to eat with to some degree that you want to pick their brain and learn from. And maybe that is, well, that's clearly and obviously a business meeting, but everything you do is about business if you're an entrepreneur, to be honest with you. I've been self employed technically since 2008, but I've been on commission since 2003 without a real paycheck since then. So I have always been building business, creating relationships, moving money in the economy, closing deals, having sales, taking risks, building pivots, hiring people. Firing people, unfortunately, it's part of the deal. But you are always moving and shaking, and you're doing a lot more things than your consumer W-2 friends. I'm not talking bad about them. That's just the reality. And that's how the tax code's written, to encourage and help entrepreneurs move and shake to go build the things of the future, and create more jobs. Everything is about creating jobs. Well, the entrepreneurs, they're the ones that create the jobs. So there is an incentive there with income taxes to help create jobs. So going back to this example on flowing money through your LLC. So if you have another $100,000 in indirect, I guess you can call it, I'm just using that term, expenses for your business, Green Plan LLC. Now you take that 100,000. So remember, you had $100,000 in income minus $50,000 of direct expenses, minus $100,000 of indirect expenses. That equals negative $50,000 loss for Green Plan LLC. You take that negative 50,000, you roll it over to your personal return, because even though you have a business, you still have a personal return. You're just not writing your business expenses, direct or indirect, and receiving income through your personal return anymore. You're now receiving it through your business. You have 2 tax returns to file instead of 1. So now the negative loss from your business flows over into your personal return. Let's say your wife takes home $100,000 a year from her W-2 job. Now her W-2 $100,000 income that would normally get taxed at whatever stair-step income tax rate that 100,000 would get taxed at will now get taxed at 50,000. 100,000 of her income minus 50,000 of Green Plan LLC's loss makes her taxable income $50,000. And that's pretty much the long and short of how that works. Remember, has to be an active participating business, structured correctly and structured properly. Structured properly means built with an LLC. And why do people not want to build LLCs? Well, at the core, it's intimidating. First of all, you have to do a name search with the state in which you decide to build your LLC. And that's actually the first decision you make. Which state do you build it in? Most people build it in the state in which they live and operate their business in. That's the simplest answer to that question, especially for small businesses. Secondly, you have to do a name search with the Secretary of State for the state in which you want to build your business in, and make sure that the name is available and acceptable. When we built Rental Property U, we wanted Rental Property University originally, but the state of Texas would not let us use the word university in a licensed business LLC name because we were not an actual university. Then after that, you have to hire an attorney and build the LLC. That has an expense. It's usually around $1,500. You can do it on LegalZoom. However, most people don't because it's complicated, believe it or not. And LegalZoom asks you a whole lot of questions that you're probably not going to know the answer to. My advice, pay an attorney the first business. If you build businesses after that, you can probably do it on LegalZoom. But honestly, by the time you do all the add-ons that you're probably going to do when you do LegalZoom, it probably costs you about the same. Then after that, you can you have to get a tax ID. Always ask for the tax ID. Actually, you don't have to, but you want to get an IRS tax identification number, FEIN, Federal Employer Identification Number. It's the business's social security number. And then after that, you want to get a bank account connected to Green Plant LLC, whatever your name is. And then after that, you want to set up your proper accounting method. Even if it's a spreadsheet, that's totally fine, but you need to have some system. For most of my businesses, I've used, and I do use QuickBooks online. And then you want to operate like a business. So now you need to talk to a tax attorney. Honestly, you should probably do that step one. Hope this helps. Talk to you later. Please visit us for more information just like this about tax code and the biggest expense most people ever pay and how to reduce it with an active participating business structured properly and setting up all things rental property investing and growing and learning in your portfolio building. Happy house rental property building, my friends. Hope this helps. Talk to you later. Bye.